All right, let's get started for our next panel, which is going to be very exciting. So we are going to be talking about investment in the decentralized future as the digital asset ecosystem is becoming front and center, especially for investors. It's becoming a cornerstone of the investment strategy and the investment philosophy as well. And that has evolved. This panel today is bringing together perspectives across large infrastructure companies, large investors, and VCs to explore the opportunities and challenges of decentralized finance and decentralized investing, especially the role of individuals today, how that has evolved from the ICO hype where we were at and how that has changed today, because the individual is also very important, as well as the product. So we're going to look into all the investment strategies, all the approaches of our three speakers today. I'm Diana. I run research and sustainability at GBBC. And I have the pleasure and honor to be joined by Anthony Scaramucci, Tanvi Singh, and Ryan Kim from Hashed. So I'll let you introduce yourselves. Anthony, start.
So I'm Anthony Scaramucci, founder of SkyBridge Capital. It's hard to believe it's my 17th year at Davos, and it's my 5th year as a Bitcoin investor. And I'm trying to stave off the aging by using a lot of Botox. I've been using a lot of Botox since I
just
made my first...
discussed it at the prep.
Yes.
Representing 3 decades.
My sons tell me I don't have a 4 head. I don't have a 5 head, but I have a 6 head. But this is all from being a Bitcoin investor. But anyway.
Hi, I'm Tanvi. I've been a banker in the big banks till last year. 7th Davos for me. Last 6 years have been representing the big banks. This year representing my fund Nirmata. We are a new venture capital fund investing into AI, deep tech, and blockchain. Anything that creates utility and create products and revenue generating, focused on India. So we're going to talk a little bit about what's happening in India and the opportunities for all of us to invest in that region. Happy to be here.
Hello, my name is Ryan Kim. My background is entrepreneur, data scientist, semiconductor designer, gold medalist in the Mathematical Olympiad, and now investor. Hashed is like have been investing to crypto since 2016, and we are always positioned as a bridge between Western and Eastern. We oriented from Korea, but now we have office in San Francisco, Singapore. I'm based in Singapore, India, and we are opening up the office in Abu Dhabi. And we are early stage startup, and we investing to infrastructure, DeFi, and application. I will talk about more about today mass adopted application.
So we have some pretty fascinating backgrounds here. I wanted to talk about expectations for the coming year and beyond. 2025 is expected to be a year where digital assets are going mainstream. Do you agree with that? And how is that changing your respective investment strategies? Start with Anthony.
So, this is just my theory, and so I'll just share it with you. I feel like the prices that we're seeing today are where prices should have been sometime in early 2022. And just hear me out for a second. So the Bitcoin futures ETF was approved in November, and pursuant to U.S. administrative law, the cash or spot ETF should have been approved by February at the latest. And so that delay, which was deemed arbitrary and capricious by the federal courts, which is why Gary Gensler had a seed round last January, I think caused all of the slowdown in price discovery. So I think this will be a big year meaning at least 100% return on Bitcoin as these markets open up and the regulatory environment gets better. But I really do think we were held back as a result of the US SEC.
What about Tanvi? How are VC strategies evolving in what you're seeing?
think initially we always differentiated between VCs, which are Web3 focused and AI focused and everything else focused and digital focused or e-commerce focused. What is happening today increasingly is utility and application focused. So you focus on a particular domain, and technologies like blockchain, technologies like AI becomes part of how you build the infrastructure. So in my view, where the VCs are going, and specifically where we are going, is to start seeing blockchain as a technology to be a utility, to be an infrastructure, and not to say that we invest in blockchain or we invest in Ethereum or Solana. And that's the big deal. We started to see the integration of traditional and the Web3 universe together. So I typically would also see companies and VCs focusing on what makes acceptability and inclusion into the Web3 universe for people that we are all familiar here in the room, while not being in that space and not being native. So think Celsius, think companies like those, but better risk management. And there are many out there that's building on that sort of infrastructure to make this whole space available for normal individuals, and henceforth bigger inclusion and bigger mass adoption.
Right. And moving on to Ryan, how are things evolving as a fund, especially as you're looking into liquid funds toward hyperliquid funds? Why? How does that work? Introduce us.
Yeah, so far we are always try to become like a VC and always a supporter of early stage startup. And so far we have been investing to over 200 projects. And from last year, I think like our environment is changing. Last year when around us like a hyperliquid, it called like kind of liquid venture fund made like better return than any other like VC fund. That's because like all the liquidities are coming into crypto now, and now listing process is getting slow. So for example, like we invest like a 30 project, like let's say, just five to six projects can list on the Binance, okay, as a Coinbase. It's 25 projects, still we are waiting for the listing. But liquid fund, they investing to token already listed on the exchange in the bear market, and that means like the price is very, very low. And once the bull market came, then like they can sell right away. And that return is like at least a 5 to 10x. So it's a much better liquidity for them, and also easy to invest, because in the private primary market, you have to get an allocation in the lower valuation. There's a kind of competition between a lot of VCs, but you can buy in the exchange whenever that you want. That means like you can they can give they can get a more flexibility in terms of decision making. So I think over time now, from this year, I think liquid venture will get the more power, and a lot of VCs are already preparing liquid venture.
Great. What about moving on to the role of the individual investor, especially on a retail level? Moving back to Anthony, how do you see the lessons that we've learned from the past years, from the ICO hype? How do you see that rhetoric evolving, and where do you see the role of individual investors, and how can this be done right, in the right way?
Well, it's probably getting worse than it, not better. I mean, the whole ICO movement and the gambling associated with the ICO movement. And so the real question will be, and I really just want to speak about the U.S. for a second, the question will be, what will the U.S. do to regulate that market, and what decisions will they make to regulate that market? And so I predict this year there'll be stablecoin legislation, there'll be some guidance related to things like Bitcoin, Ethereum, and Solana. Bitcoin may end up getting regulated by the CFTC. But then the real question is, where does the meme coins, where do they fit in the marketplace, and what are the utility of the meme coins, and how should they be regulated? And so we now have a president that has a meme coin. So I think the chances of it actually getting regulated is probably not likely. But remember, it is regulated outside of the United States. And so I think that will create some complications for U.S. meme coins.
What about Tanvi? Do you have any comments to respond to that?
See, from my perspective, for regular retail, it's very hard.
Do you own the Trump coin? You could tell us if you
No.
do.
I should have. But
How many people own the Trump coin? Come on, raise your hand. All right,
oh my God,
okay, yeah.
how much did you make?
I'll tell you later.
I didn't think somebody from India could go as red as you, but you're going very red right now. I mean, that is a very nice rouge color you're making. So you made a lot of money on the Trump coin?
Yes.
Yes.
You guys were good. Let's keep it that way.
Are you still long the Trump coin?
No. Melania was launched.
Switch this.
We did it together yesterday.
Switch to Melania.
It's already 300% up, by the way.
The
My
Melania coin.
gosh. No, I think, Diana, you got your answers. There's nothing more we can talk about the craze on the meme coin and people wanting to make rich overnight. I think it's the highest level of gambling on steroids.
So can I just ask a question to the audience? So the Trump coin and the Melania coin, raise your hand if it helps the industry, Two of my partners think it helps the industry. You think it helps the industry, right? So two of my partners think it helps the industry. It expands the throughput in the industry. It broadens the investor participation. If Solana can hold up, it looked like it had a stoppage last night, but it's taking a tremendous amount of volume, so it's validating for Solana. How many people in the room think it hurts the industry? Okay.
Long term. Yeah.
How many people think Jamie Dimon is going to buy the Trump coin? Anybody? I just throw that out there. Okay, go ahead. I'm sorry.
No, a better way of investor protection is to buy through regular exchanges coins that are registered in the Coinbases and the Binances. That's a better way of protection. And what we do in Switzerland very often is to buy it through ETFs and to buy it through registered funds and products without having to get the exposure and being in the wild, wild west. But that's what we believe people should do. I don't think that people would listen to unless they can make money the way we see it in the crowd of 100% or 1,200% on the Melania coin. That is what the news projected. And $50 billion of market cap on the Trump coin. And those are obnoxious numbers.
What about Ryan? What are your thoughts? The role of individuals. How can we do it right? What's going on today?
So I will touch on the attention economy. I mean, crypto always get attacked by a lot of TradFi that Bitcoin doesn't have a fundamental and basically but Bitcoin evolved to the now in the mainstream, and I feel always a crypto business is marketing 80%, fundamental 20%. And Web2 people like me say, we'll come back 50-50. More fundamental, more product, more utility, less marketing. But the thing is now, we can see the meme coin that I think the ratio is going to 95% marketing, 5% product, and meme coin is 99.99 marketing, 0.01 fundamental. But rather than criticizing this, I just observing this phenomenon. Why? So before last November, I was very, very negative about meme coin, so I didn't buy anything. And I buy just one meme coin, I will not say that. But after I buy meme coin, I realized my social network activities became 5 times fun. Because more fun. Because I'm resonate with my meme coin holders, and I'm sharing, and also somehow I get more bonding with the meme coin holders. It's if you have a dog.
Social aspect.
Yeah, social aspect. If I have a dog, then you have a dog. Then we can get close very, very quickly. You can say something about, your dog is so cute. My dog is so cute. Your Dogecoin is so cute. My different Dogecoin is a little bit ugly, but adorable.
But Ryan, can't we say my Bitcoin is cute and yours is too?
Yeah, so it's a more of a social aspect, and it's like a TikTok contest. Like, if you think about like a TikTok contest, everybody's saying, "Oh, TikTok contest will make you dumb," but all the teenagers and millennials, they're addicted to the TikTok, and TikTok content, the platform is now the largest platform in the world. So how we can see that? I think, rather than like criticizing it or just shut down the TikTok, how we can make a benefit from that platform. This is my thought, basically. And maybe one more time. So individual investor perspective, I think like KOL is getting more important. And now a lot of retail investors are a little bit, avoiding VC coin because they raise more, the value up to like 3 billion, 5 billion. After listening to the Binance, like price go down to 1 billion or less than 1 billion. And they're now the reason why they love meme coins. They start the valuation from 1 million. 500K, and there's a huge upside from the retail, and these individuals are, I think, like making some movement, and VC have to learn from there.
Basically, Trump is the biggest KOL?
I think so, yeah. And
Anthony,
Elon
I
as
think you
well.
had a comment too.
No, I was just going to ask him if he thought that the fart coin was adorable, but I guess, maybe it didn't fit the category of the other adorable meme coins, but go ahead, I'm sorry.
Yeah, it's a move from kind of craziness and meme coins and socialization to a little bit more, how do we apply our current rules and the regulatory regimes, and how is that evolving across different regions? And Anthony, if you could give a perspective on the US and more like the West, and we can move to Asia with Ryan, and Tanvi with the India and Europe.
So, what attracted me to this space is first of all, I was like Michael Saylor, I didn't understand the space and I was very negative on Bitcoin. I think Michael entered the Bitcoin marketplace in August of 2020. SkyBridge came in sometime in October after having long conversations with him. And so I'm going to maintain, it's 5 years later roughly, that is the operating system of the future of finance. There's just so many reasons why I believe that, and the network effect for something like Bitcoin is expanding now exponentially, and it is going to be accepted. And if Brian Armstrong is right, and there's a game theory analysis where every great sovereign nation has to put some Bitcoin on their country's balance sheet, it will further the charge of Bitcoin. So for me, when I sit here, I would like that to happen, and I would like things like Ethereum and Solana and maybe Sui. You pick the ones that are fast and can hold on to a lot of throughput to become the new rail system for finance as we start to tokenize real-world assets. We're going to gamble. We know that from the beginning of time. It's one of the oldest things out there, and so we're going to gamble. I guess the question is, I always worry about the regressive nature of gambling, because there's a lot of very smart people in this room that know how to do this and can make money for themselves. But the term rug pulling, when you grow up like I did, where you've got people that haven't made a lot of money in their lives, and they see this as a potential get-rich-quick scheme, and they end up losing a lot of money, that would be heartbreaking for somebody like me. So for me, just quickly, this is the new operating system for finance. This is the new rail system. We've got to regulate it from a global perspective. We've got to allow for real-world tokenization, but then we also have to figure out a way. Of course, we're going to gamble, but how do we make sure that we're gambling in a way that isn't overly regressive in a society right now where lower and middle-income people are becoming more and more populist?
I love what you say about the new operating system for finance, and how the expanding wealth gap, how we can deal with that. Ryan, moving to an Asia perspective, do you agree or disagree with what Anthony said, and what trends are you seeing in your side of the world?
Yeah, I think the U.S. and Asia are totally different, because U.S. SEC power is just very big, but in Asia it's very fragmented. Obviously, except China. Korea, Japan has a very strong regulator, but Southeast Asia, each of the countries like Vietnam, Thailand, Malaysia, they have a very weak regulator. So I observed that like Korea, Japan, there are not many crypto decent, but rather like so many institutions are leading the crypto trend. So as a Korean, the Korean status is like regulators preparing like a lot of regulation for onboarding institutions for now, and maybe stablecoin and ETF. They're following up the US regulator. And unlike China, Korea and Japan didn't close the exchange. So now if you see the market, fiat crypto trading volume, KRW and Japanese yen market is one of the largest in the world. And Southeast Asia is a little bit different. Like their local exchange has a minimal trading volume, but there's so many OTC players, and they just change their fiat money to crypto, Bitcoin or Ethereum right away, or USDT, and go to the Binance and trade there. And there's so many crypto design and native there. And now, if you see, for example, like a Solana ecosystem, a lot of application founders are from Malaysia, Jupiter, Drift, and also Pendle or like Virtual. So many like decentralized applications are coming out. So depending on the how strict the regulation is, the crypto ecosystem status is a little bit different.
What about the EU and Europe overall, Switzerland and India across the board? Tanvi, you're kind of in the middle. Tell us what you think and if you agree or disagree with the two perspectives that have just been raised.
I think Switzerland, on one hand, very, very regulated, being the crypto nation from the very beginning. Lots of very positive sentiment, but we still have banks that do not give loans to blockchain companies or do not take them on the payroll. So there's a little bit of a dichotomy here. But at the same time, you could start buying Bitcoin at any denomination you like in our post offices, which is where the maximum amount of retail individuals are there. So I have seen people literally buying Bitcoins who are 70 plus in their age group as part of their investments. So that's how open and how easy it is to invest into the overall crypto universe when it comes to Switzerland. And it's diametrically opposite when you see this in India. It is huge capital gains. It's a criminal offense to be investing into the overall crypto community, although with different channels and the different ways, you see a huge number of Indians with Indian passports, not just Indians who are residing outside of India who have invested into this asset class, specifically because of the declining power of rupee. So it becomes a hedge, just like Indians are the biggest investors into gold. Indians are also becoming increasingly big investors into Bitcoin without seeing a very positive and a very clear regulations on what it means for ownership of digital assets like Bitcoin. But I think I like to put the perspective on not just the investments into crypto, but the usage of this technology overall, which is always underestimated, always remains under the lines. The recent joint venture between Reliance, which you can think of Google when it comes to India, has had a joint venture with Polygon on a lot of these Web3 functionalities to be available across the chain through the networks without exposing the retail or the end customers to the complexity of what Web3 does offer. And that would bring in the possibility of having Web3 blockchain-based processing capacities and use cases to be exposed to 1.2 billion people on the planet. The other very interesting use case, we all hear the NFT market is dead. No, I've not heard NFT at all in this room today so far. A lot of those exchanges are coming to a closure. Nobody is interested in NFT. But what I found interesting is one of the biggest event on the planet is a very cultural event in India. Some of you might have heard of the Mahakumbh, which happens once every 12 years. And that's where the Indian Railways, a government agency, has been issuing NFT for the train tickets for people to travel to Kumbh. And I find that is a fascinating use case. on Polygon. So if you have a use case, how you build that use case, how you bring the utility to the end clients is what one should care about, and not to say, I want to sell NFT and just try and find a use case to it. And in that context, I do see India doing a lot more at scale, subtle use cases of blockchain, exposing this technology to the end clients, which is the 1.2 billion people, in a very interesting way.
What about final question to the three of you, and then we'll make time for audience questions as well to make this more interactive. What are your thoughts on investing in Web3 as crypto versus products themselves? So Anthony.
So we've stuck to the tokens, basically. So we own several tokens. I always get in trouble because I forget one or two of the tokens, and then people say, oh, he doesn't like that token anymore, but that's not true. I just can't remember. We've got maybe 10 or 12 tokens that we own. The big ones for us are obviously Bitcoin and Solana. We do own reasonable sized positions in things like Algorand and Avalanche and Polkadot. And I'm not saying that the other stuff's not going to work or anything like that. It's just that we've tried to keep it very simple.
Okay. What about Tanvi? Do you have some thoughts on that?
So personally, I have investments into tokens that have done very, very well. Can't complain. But from a Nirmata standpoint, our focus is in investing into products that have a blockchain component to it. And that is what is bringing the excitement into the game. I come in from a TradeFi background. I see the necessity of adding risk management to be able to offer these assets over to the masses. We build products where we tokenized gold, where we tokenized multiple different RWAs, and having it handed over to the retail clients here in Switzerland as part of our UBS components. So there's so many opportunities of doing RWA tokenization, risk management, simplifying UI for the end clients, the ones that are not into the Web3 words, as to be the better use cases or the more prominent use cases that we would invest into, which is quite different from investing into the tokens and the coins.
Yeah, I try to learn from history, like in the stock market. For example, like GameStop. GameStop got super popular like a few years ago. The price went up like at 5 to 10x, then went down to like the price like a few years back. And I always think like a GameStop cannot become a Google, right? So if they don't have a product, just with the popularity, price can go up temporarily, but eventually it cannot become like a trillion. But like the marketing helps for the mass adoption. For example, Elon Musk, Tesla at the beginning, like Elon Musk sold vision to the public, even though they're losing so much money. But at the beginning, there's so many pessimism around the EV. But eventually, they delivered the product, and now it's like $1 trillion company. So back to my point, like the marketing product, the ratio 8 to 2. The Pareto, the ratio is I think the best in the crypto, and always like the marketing health. So even though the product is really, really good, if people don't pay attention to the product, just not meaningful. So crypto, especially in the crypto world, the founder have to maximize the characteristic of the market. So just maximize the marketing and deliver the good product afterwards. I think that's my point.
Sounds good. Well, thank you so much. If anybody has a question, be polite. And you in the back?
Maybe I need to get a microphone. Be loud, or come up to the front and introduce yourself.
Actually,
Okay.
you can hear me, right?
Yep.
So,
Who are you?
I'm Rishabh, by the way. I'm Rishabh from TDMM and TD Group. We run a crypto fund and a trading house based out of Dubai and India. We have invested in over 200 companies over the last 10 years, and we share some of our common portfolios with our esteemed panel as well. Actually, the question is to you, the moderator, because you asked, the last question that you asked was, where do you invest, in tokens or products? Which means you, in your mind, you have categorized it tokens or products, not products backed by product having tokens, right?
Yeah.
So token essentially is an evolved form of equity. it's not tokens only or products only. Any token is, earlier the value accrued by a product was being converted into equity to equity holders and was distributed in the form of dividends or profits.
But do you have a question?
Yes, this is the question here. So how do we, when coming to the question, so when you're saying tokens versus product, what do you, like, do you mean equity versus tokens, or do you mean product out tokens? Or meme tokens or product tokens?
Well, I guess there's many different constructs, and I would probably defer to the investors themselves, because there's so many different strategies, and that was a simplification of, I'm sure you can speak further as well.
I just to like, as an investor, I weigh the token price, I mean, or the fundamental, the revenue, something like that. I thought like, no, yeah, that way.
And there are products that generate revenue outside of the token increase. So I guess what Diana is wanting to ask us, are you investing into products that you can evaluate the product performance just by the token? Or does it have a product that can generate revenue and has value other than the token, or completely outside of it?
Okay, I'll take it.
Review that.
Just to say.
Next question. Emma, you have a question.
Emma Joy, head of EMEA for GBBC. Quick question, Anthony, you mentioned regulation earlier. Do you have any views on what you see happening in the US this year?
Regulation in the U.S.
So I could be wrong, but after talking to people like Tom Emmer and Senator Gillibrand from New York, Senator Schumer, I think that there is a bipartisan commitment, Cynthia Loomis, et cetera, to put legislation together that provides regulatory clarity. And I think if you're in the U.S. and you're running your business in the U.S., you know that we've been dealing with what companies in the U.S. call regulation by enforcement. And so people are looking for the rules. They won't tell you the rules. One of the judges recently said that Coinbase was right, and that you guys, Coinbase is asking you for what the rules are, and you're not providing the rules. And so I think by the end of this year, because they have to do it before the midterm elections start, which they typically start January, February of 2026, they have to put that in place, because they've got a wake-up call from the crypto world, and don't quote me on this, but I think it's about $300 million went into these campaigns. $40 million went into this Sherrod Brown campaign in Ohio. As you have to just think about the magnitude of that. They knocked out a senior guy in the Democratic Party, 18 years in the Senate, head of the Senate Banking Committee. And so they blew him right out of the water. And so I think in a bipartisan way, people don't want the crypto. You know, we used to have bond vigilantes in the 90s. We now have like crypto vigilantes, you know, and they don't want them in their campaigns against them. So I think this happens in the next 14 months.
Thank you.
Yeah. Any other comments? Well, moving on.
Can I, so Sandra Rowe here. I want to ask you guys sort of, you know, there are different types of investing. You've articulated that. This is a very exciting space. Do you see the rise of the individual retail investor? Because this is what we're really seeing, right? The democratization of people just being able to go in, and whether it's for fun, meme coin, or whether it's for investing in a product or a company. Do you think this is the direction of travel that we need to be encouraging? We just need guardrails. Or do you actually think it's going to actually blow up in all of our faces and it's going to regress back to institution?
Yeah, I mean, from my standpoint, if you do have the guardrails to say, to differentiate, and if it's a meme coin, people know exactly it's a meme coin, there's not a utility coming out of it, and they have an informed decision on it, this is a much better way of investing. Because unless being a passive investor, you could be participating in the DAOs, you could be part of the communities, you can help shape the projects that you care about. As that's the decentralized form of investing, which is only possible with blockchain, because with the amount of money you invested into a big company, you would not be part of the day-to-day of that company. But with the way a retail investor can invest into these products is just so much more. It's so much more exciting to be a part of a community, to be investing into a purpose you care about. And we have seen a lot of those investors that became part of the community actually ended up building the product and became part of the product, which you would hardly see in any kind of investing outside of the Web3.
And I just follow up with that? Should accredited investor, and that's a very American term, but should that concept be applied then, or should we actually allow for pretty much anyone and everyone to be able to come in? Like, what's your view on that? Do we need to have like an accredited investor status or a line?
I think Pearson and David can really help us with that, of what what an accredited investor
About
needs to be
credentials.
from an educational standpoint, not how much you've invested and how much money you have, but if you do have the skills and the knowledge of what you're doing, absolutely.
I think being key opinion leader or influencer in a social network is inevitable. I think currently, if it's just current market, the most powerful, the richest people are influencer, Elon Musk and Donald Trump. So I think now the power is moving from institution, group, and company to individual, and certain features, a certain function will be replaced by just individual. And now I think especially in crypto, last cycle, all the projects want to onboard like a VC, crypto VCs at the early round, but now VC term is worse than KOL, influencers term actually. Influencer term is like a lower valuation and shorter term of a vesting period. So this is just phenomenon, not hypothesis. So our goal this year is everybody in our team have to become influencers in the market.
Well, now we're going to wrap up. And I want to reiterate my gratefulness to the three of you for your time, sharing your insights. And finally, point out Tanvi and Anthony are wearing matching shoes. So does that say anything about common themes?
I need her heels,
Great
so that's my
minds.
problem. Another 2-3 inches would have been a different life.
Great. Thank you so much.